Hello, traders. It is 8 a.m. Chicago time on Thursday, the 14th of November, 2019. We're halfway through the month already. And here in Chicago, it feels like we're halfway through winter. The weather is incredibly cold, historical lows here. You can come out and build your own igloo in front of the Board of Trade over the last week. It's so freezing. Anyway, this is episode number 1639. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have, again, a market that is a little risk off as we come into a session, as we come into the overnight session that saw some good news and that was refuted. The key element here today, and hopefully you can hear me loud and clear. I see that someone's saying that there's an issue with the audio. Is there an issue with the audio? Just let me know. The main theme or the main news is that there was an announcement by Trump, POTUS, that he's very confident that a deal will be done. However, this morning the numbers out of Germany show that it's avoiding a technical recession. And then we still have trade concerns. Chinese latest weekly purchases of U.S. soybeans appear to be well below market expectations. Also, some soft data from China on 2020 GDP that is showing that there's a probability that it'll be under 6%, which China hasn't seen for a long time. So that's where we are. There's always something pushing something around. But the Eurozone GDP came in at 0.2% Q on Q in line. And year on year, 1.2 versus 1.1. Man, it's pretty low GDP growth in the 1% range. So that's where we are this morning coming in. But it looks like the market is prepping for risk off. We've pulled away from the relatively strong close yesterday. The market yesterday was responsive up. It looks like inflows into equities after the open. A nice little setup there. I'll go over that. Walmart announced this morning coming in at $1.16 versus $1.09, $128 billion in revenues, which was lower than $129 expected. Imagine $128 billion in a quarter in revenues. This is where the trade deal and these tariffs really could cause some pain. Anyway, so that's where we stand. We do have some comments from Fed Vice Chair Clarida saying that the Fed remains content with its current monetary policy regime. U.S. is near or close to max employment and price stability. The market has popped higher at about 4 a.m. Chicago time, 5 Eastern, and has retraced and gone back to the scene of the crime and has been consolidating around the overnight point of control since then. It's looking weakish, but we'll see how it opens. This morning, what's left on deck? We do have Fed's Chair Powell's testimony at 10 a.m. Eastern. We do have gasoline stocks if you trade that. But other than that, the calendar is relatively clear. Here's what we've got in terms of review. It looks like the scribbles on here look like something out of a coach's clipboard. But yesterday, the expectation was the primary expectation is for it to get responsive. Was looking for 3090 test, can go as far as 3092. And then I was looking for a turn lower and a test of 3073 and a quarter again. That's this MC point of control. But given yesterday's action, that has shifted. The MC point of control has shifted to 3093 up here. The secondary scenario was pretty much on We pushed lower, impulse back in, and pushed back into the range. Was looking for a target of 92.5, 93 there. It went to 97. Here's what we actually got. Pretty good rotations yesterday. Nice opening swing. Hang on a second. I have to reset my charts this morning, so it shuffled some things around. Just take a look at this again. So 75.75 was the overnight low, and what it did is it opened up, tested one tick above that or so, back up one or two ticks below the prior day's low. That's this green line right here. So let's get rid of the stock zone areas to clean up the chart a little bit. And then it pulls back where to the opening print and then breaks higher. To me, this starts to lock and load a long, and the long would target 30.90, and then above that 30.92 as I discussed. And end up rotating back to the open again. So that just did not look good. This looked like a little bit of a shakeout here. And then finally it started to pull back with what seemed like reasonable, push higher with reasonable pullbacks. And the delta was in line with that. And we end up taking out that point of control. And the next big volume area was that 30.97-ish area. And then above there, we had 30.99.5, and those were the areas that we were expected to test. We break the IB high, push into 97, impulse down on news, and then consolidates in the middle here, right on top of the mid, on top of VWAP, and then starts to walk up into the close to finish relatively strongish. Into the prior day session. So this is what we're seeing here yesterday, which was kind of a lower probability in my opinion. What we're seeing here is responsive buying and the buyers kind of getting aggressive. What I did expect is, given the high that we put in the day before, I did expect it to push lower into 30.73 is the highest probability. We are likely, since we were fishing for buyers lower into the overnight session, the expectation is that would continue through to the most traded price in the region, which was 30.73 before we consolidate, and then buyers have a pretty good advantage and a pretty good starting price, entry price or add price to squeeze back into all-time highs. The overall trend, as I talked about yesterday, is to the long side, and we have to kind of keep that in mind that's what it is, and trade from that side. Here's the big picture. This is the composite chart. Note that we're completely in a consolidation here after these highs were put in. We're not coming off very well. You can see these white candles, meaning the close is higher than the open. Buyers are quite active in this area, and we have pretty densely populated. Let me change how this looks because it's just terrible. So let's change that to 50% and then change it into something a little more easy to see. So you can see that the trade in between this 97-ish to 63-ish, there is a lot of activity. I mean, look at the volume at each price. There's a lot of price discovery in that region, back and forth and back and forth. It's just being painted across the board. There's no consensus here. If we had consensus, what would this profile look like? It would look like this. That's what it would look like. But instead, it looks like this. And what does that mean when you have relatively equal volume across a large range of prices? It means that the price discovery process is very, very active, and they're testing and retesting every price along the way. They're seeing value in a broad range of prices, and what that does is it creates an environment where the trade is could be somewhat erratic, right? Because there's interest from both sides. Whereas in this profile here, in this volume profile here, you can see that the volume, as prices go up, that the volume tapers off, that the volume kind of dies out, and there's less and less interest, and it creates better opportunity to fade those edges, trading from what's called the extremes in, or outside in trading. And you can see, you can really then identify the most valuable price, and that'll be the first stop, the first big target. But with a box like this, I mean, it could ride up and down. And you'd see false positives in terms of order flow all the way through, because the entire range is being tested. So that's what the volume profile is showing. I don't know what the moving averages and others are showing, but that's what we see here, in that, just kind of be aware of the overall narrative and context so that you're not getting run over. The overnight session tested into 30.9975, so just one tick above below the century figure of 3,100. Came back through and then consolidated. I believe the Trump stuff was here, and then GDP, Eurozone GDP was here. And then we get the spike up on the Eurozone GDP, and then we pull back to the scene of the crime. Both instances, we pull back to the scene of the crime, and the overall profile is somewhat balanced. We can see consensus to the lower end of the range at 30.9050 with the highest volume price there. We could see that the mid and VWAP are above us. We do have a little bit of resistance up here in alignment with this 93 point of control, and it's also the 93 is also the MC point of control. Now we can see that from where we are, although it's too tight right here because we're trading at 30.90, we can see that there's a fair amount of potential resistance. The volume overnight is okay, 211,000, higher than the expected value, or the most common value. So the participation is okay overnight. If I was to, I don't quite trade this way, but if I was to be one of these classic market profile people, I would say that the profile is somewhat incomplete on the downside. You could see that it cuts off quite abruptly, and 30.87 right here, this region right in here, has been tested and retested over and over and over, and we have somewhat of a weak low here. So the extension down is would be a natural process, and it may only go down as far as 85.50 or 85 even, which was the closing swing low from yesterday. But who knows? We trade what we see, not what we imagine. The overnight inventory is mostly short in price. The delta is actually flat. There is no winner here in terms of aggressors in the overnight session. Really, overall, a pretty sideways session. Let's switch gears here and look at CT Bookmap. What do we have? CT Bookmap shows that we got that spike early on, so we reopened right here at 5 p.m. Chicago time, tested lower, pushed up into that 99.75, and then you notice that the liquidity comes in as soon as the market moves away. That becomes somebody's target, right? So the liquidity comes in at 3,100, and then the market pulls back off, goes sideways through most of the Asian session right in here. The Asian session actually goes right through here, and then the Europeans come in and push this thing around a little bit at 2 a.m. Central, and then we get GDP, and then the market just falls right back to the GDP SOC, the scene of the crime, and we've been kind of sitting sideways. So the market has made 1, 2, 3 attempts at pushing higher and is confronted with supply and comes off, right? And is coming off. And that's why the view, given the current information, that's all I can do is see what's in front of me and assume that that's as good as that's the latest and greatest information. Given current information, I'm seeing that there's a fair amount of resistance between 93 and 95 coming into the session. That doesn't mean they won't ram through it when we open. We don't know what the participants will do, but just be aware of that. In the overall liquidity picture, for those who don't have this software, 3085 below, which represents the one volatility, the first sigma down for volatility, historical volatility based on 20 days of closings. That 85 has some supply, and then beneath there 80. These look more like option supply rather than anything else technical. Same with 95, 3100. These are all big strike prices. Okay, we're heading into tomorrow. We're heading into options expiration, monthly options expiration, weekly options expiration. Tomorrow, the 15th, is the third Friday of the month. That's when options expire. So just coming into it, there's generally a bias coming into those expirations. So these kind of the 5-point levels in the ES have a little bit more play as folks try to hedge the exposure that they have in those monthlies and weeklies potentially. So that's the liquidity picture. Let's take a look at what's expected for today. So for today, let me turn on stock zone areas here. For today, the primary scenario is the expected primary scenario is responsive. We're opening right in this. Let me expand this a little bit. There's the composite. You see that composite to the left? So overall, we're opening in a relatively balanced area down here. So the expectation is we're likely to gravitate towards 3093, the MC point of control. So an open auction in range and value, responsive, pushes into this 92, 93 area, consolidates, and then I'm expecting it to make an attempt into the high. I'm expecting resistance here, but that doesn't take us away from the fact that we're only a few points from the all-time high as we head into the session, and it's likely to push through. If it cannot take the 97s out, we are likely to see a push down, an impulse down, and a test of 85, and then 80, 82.75, and then potentially a bounce there into the close. I'm not expecting too much range. I do not expect an inside day, so I'm looking for those 97s to potentially break with a lot of resistance or some decent resistance in the way. Secondary, we get an open auction that pushes up into the 92, 93 area, impulses down, takes out the overnight low, extends the overnight profile down into 83, and then starts to squeeze into 78 and potentially bringing us back to the prior MC point of control for the bounce. That gives us, with that push from approximately 93 down into 73, we will have stretched the daily range statistic. We would be pushing into the second standard deviation of that. So I'm not expecting too much below 73 if it even gets there. But that's the secondary scenario. The secondary scenario is bearish, but it's still well within the profile and balance. The market's loving these prices, between 63 and 3102. We have a fair amount of balance, and if you notice, these lines that I've put in here are well within this highly accepted and traded area on the profile. This is where volume profiling dominates, where it just gives you something that's very clear And, the market kind of builds itself brick by brick, piece by piece. And then, once the market goes from balance to imbalance, it crushes one side or the other. So that's, I made sure I spoke out all the awesome words. But that's where we're likely to be. It is Thursday ahead of option expiration. I do expect a fair amount of discovery today. So pay attention. Good luck. And I want to remind you again, please sign the petition for the micro crudes. I'm going to put the link in the chat, and I'm going to put it on my Twitter feed. You can find my Twitter feed as it shows here at Futures Trader 71. Please sign the petition, and if you know other traders who trade futures, please pass it along. Let's get them to sign it. I'd like to get it to 2,000 names before I present it to the CME to get that product launched. Good luck.